Thank you. Yeah, I think we just heard about office, green shoots, the beginnings of a recovery. You know, I would argue that retail, which, if you remember, went through a massive disruption both pre and during COVID, is probably 5 years ahead of office. So it's already gone through this, and we're on the other side of it. But if you do cast your mind back to even like 10 years ago, retail had a bunch of challenges. So it was definitely oversupplied. In the US, we had about 2 to 3 times more space per capita than any other country. Like Australia, where I'm from, UK, we were kind of second and third in terms of oversupply, but a lot of supply. We had e-commerce, which, again, if you wind your mind back, it was less than 10% penetration. In a blink of an eye, it went to 20%. That meant that retailers had to spend a ton of capex on sort of right-sizing their physical footprint, rethinking sort of their omni-channel strategies, redesigning the consumer experience. And these were retailers who were already paying high rents, weren't generating a ton of sales, so they were already pretty stressed. So that led to a lot of bankruptcies, a lot of store closures. So retail was tough. If you wind the clock forward to where we are today, as you said, David, we've had negative supply growth, meaning more demolitions, more repurposings than new retail. So that's a real positive. You've had tenants who are now really healthy, and they're fighting over less retail quality space. So that's giving us landlords a lot of purchasing power. And then you have a capital markets, which, you know, we're seeing office yields rise, but here in retail, yields are already high. You've had NOI growth, and you've got this value gap. So I think that's why we're seeing a lot of capital being formed and targeting the sector. But the key underpinning really is the retail, is the consumer. So US, just to remind everyone, you know, 70% of the economy is driven by the consumer. Different to Germany, different to other markets around the world, but it is a consumer-led economy. And we've been waiting for years for high inflation, high interest rates to really bite the consumer and see a downward trend in sales. Just hasn't happened. And I think the reason for that is that there's been a ton of wealth that's been accumulated. So you go back to COVID, we had all these savings that stayed with us. You add to that house price appreciation, equity market performance, and then even recently, wage growth of 4 to 5% has meant that all of our wallets have been padded, and we're spending on everything, ranging from luxury all the way down to groceries and necessity goods. If you look at the right-hand chart here, basically we've spent ahead of trend, and that's again due to this wealth accumulation. The other key point, though, is supply. So I think a lot of the segments yesterday touched on, you know, starts that were declining, but they were declining off elevated record levels of supply. In retail, we're declining starts off nothing.